I bet today is the 25th of April, and I'm going to be doing a weekly review for the 20th of April, all throughout the 24th of April for NASDAQ, and then going to be doing an Ethereum overview. So, just kind of a follow up from what I last touched on when I spoke about Ethereum. So, taking a look at NASDAQ on the weekly time frame, we have the previous week's high, previous week low, and then we have that weekly opening right here. And we see that this week simply just followed the exact same motion that we've been seeing over the course of the past 3 weeks. So that buy side delivery motion. And with this week's trading, what we have done of rather significance would be piercing through the all-time highs. So during this week's trading, we ended up engaging with the all-time highs that resided right here. And then taking a look at the daily, we have that previous week low and then the previous week high, and then we have that weekly opening. So we have Monday's price action being an inside day of the Friday's trading candle from the previous week. And then we have Tuesday engaging with that previous week high. And with this engagement with the previous week high, a cracking correlation is then established. So ES fails to engage with its respective previous week high while Nasdaq engages with it, and Tuesday ends up closing as an indecisive candle. We end up seeing Wednesday opening devil's mark with the candle open, deliverance towards the buy side, and that is what engaged with our all-time highs as well as closing above our previous week high. And then we have Thursday's price action delivering down towards sell side, engaging with our previous week high, as well as the all-time highs, which resided relatively near the previous week high. But more importantly, what Thursday's trading was doing was correcting the devil's mark from Wednesday's trading. So coming down and engaging with the devil's mark, which was left from the Wednesday's trading. And then the last day of the week being Friday, opening and delivering straight towards buy side, and once again leaving a devil's mark. Now, with the observing of the daily time frame right here, and with the acknowledgement that okay, right now price is currently printing these devil's marks on the candles, and we're printing them at the opening of the candles that are delivering towards buy side. It's to say that price action is very one-sided in terms of it wants to deliver towards one direction. We're failing to even trade under the opening of the candle, indicating very strong one-sided price action, as we can even see these two candles that printed a devil's mark in relation to the wick, the top wick of these candles. They're relatively close to the closing of the candles, so the candles are very expansive in that one-sided direction. The only thing that I take a note of is the fact of where we're printing these devil's marks. So we're at all-time highs at this current point in time, and I view this price action as rather overextended in terms of we barely even retraced back into the previous week's range. And with this week's closing, we end up forming a weekly imbalance that resides right here. So we have a breakaway gap that resides here on the weekly, and now we have another weekly imbalance, and then we just had this week's trading which closed above our all-time highs. But we're rather overextended in this move, and we're printing devil's marks. So with the printing of a devil's mark, with the formation of a devil's mark, there has been no manipulation for that candle in relation to the candle's power of three, which is why we end up seeing Thursday coming back down and correcting this Wednesday's trading. Yes, that Wednesday's trading to correct that devil's mark in order to fulfill the manipulation for this candle. And devil's marks are very nice to see in price action when we are located in a discount of a range. So when price action is located in a discount of a range and we're seeing devil's marks on the opening of bullish candles, this is very good because we are looking to see price action be eager to deliver up towards buy side. But in the case of where devil's marks are printing, where we are for one outside of a range and then for two in a premium of the range, it can be viewed as a form of manipulation because these devil's marks serve as very strong drawn liquidities, especially the daily devil marks, because that is where the NWOGs or NDOGs reside. But it'd be very important to take a note of or take acknowledgement as to where these devil's marks are printing in relation to price. My entire engagement with price action boils down to four words, being time, where, why, and how. By asking questions in relation to these words, it can bring you to a narrative and an understanding of what price action is ultimately doing. When are we doing this? When have we done this? Where are we in price action? Where are we going? Where are we being delivered from? Why should we currently be drawing towards where we are drawing from? Why have we been delivered from where we've been delivered from? Why are we doing this right now? X, Y, and Z. Simply asking questions with those words in relation to price action, it will bring you to a narrative. And then lastly, being how is like, how can price action get here? How will price action deliver in terms of, okay, is it going to be a high resistance liquidity run, or is it going to be a low resistance liquidity run? What PD arrays within the matrix is it going to look to utilize in order to deliver to the draw in which we think it is currently delivering towards? But the devil's mark's printing at basically being outside of the range, because this devil's mark is, I'm pretty sure, above all-time highs. And this is automatically serving as a drawn liquidity going into next week's trading. But of course, I'm not going to try and target it very, very aggressively, because I know that right now we're sitting at all-time highs. We're looking to engage with new institutional round figure levels, being the 27,000, 27,000 and a quarter, 27,000 and a half, so on and so forth, all the way up to 28,000, possibly even exploring up above that, as well as the fact that later on in the video there are some standard deviations that project for us going quite high in a sense. But taking a look at the hour 4, gone on a little tangent there, this week's trading was very whack, to be quite honest. There's no other words to really put it. I only engaged twice during this week, so it would have been Tuesday's trading and Thursday's trading. And Friday's trading, I was also willing to engage with price action, but the framework simply just wasn't there, to be quite honest. So we have the weekly opening right here, and before we even get into the price action, the first thing to take acknowledgement to would be where the week has opened. So the week opened here, and the previous week would have closed right here. We have our new week opening gap, and this is where a lot of the price action for the week is being delivered around. Price action is hanging around this new week opening gap, and it's inviting for very poor conditions when we're looking at price action intraday. But we have that week opening right here, and we have that very lethargic slow motion grind towards the previous week high as we reside inside of that new week opening gap, and we end up having the engagement with the previous week high, and this serves a cracking correlation. Like I mentioned earlier, ES fails to engage with that previous week high, and Nasdaq engages with it, and then this invites that sell side delivery motion, and from this sell side delivery motion we end up coming down and engaging with that weekly opening that resides right here, and from there we have that deliverance back up towards buy side again, and another cracking correlation presents itself. So at this current point in time, ES is currently making lower highs while Nasdaq is making higher highs. The fashion in which we ended up displacing through this high was the printing of an imbalance right here, and we end up seeing how long price action is sticking around it. So a multitude of candles, price action is just accumulating orders inside of this imbalance right here, and this would be Thursday's price action. We end up seeing Thursday delivering down towards sell side, correcting that devil's mark, engaging with the lower fractal TLPs, which are a lot more evident when we drop down in time frames, but engaging with those lower fractal TLPs. But then we also end up presenting a cracking correlation, so we end up seeing this candle delivering down towards sell side. ES ends up engaging with this pool of sell side while Nasdaq fails to follow suit. And then we also form a whipsaw candle. Whipsaw candle being right here. And going on a little tangent here, I like whipsaw candles. Whipsaw candles are one of my favorite type of setups to present themselves, in terms of when a whipsaw candle has been established. The first thing, in order to determine if a candle is a whipsaw candle or not, it's essentially just an indecisive candle. And a rule of thumb to identify these type of candles would be, for one, the wicks are a lot larger than the bodies, as well as the fact that the closing of that candle is going to close relatively close to the opening of that candle. But the reason why being as to why whipsaw candles are one of my favorite types of setups is because when this candle closes, for instance, if we are to continue that deliverance up towards buy side, so we continue that deliverance up towards buy side, and then we finally see that engagement with that high, you then look for price action to form a point of inception after engaging with that high, to continue that deliverance down towards sell side, and then engage with the opposite range of the whipsaw candle. This is very, very nice, and a very clean setups, because during this deliverance up towards buy side, it may serve as high resistance, and this is simply just giving you another drawn liquidity in terms of right here, a TLP will end up forming. It's even better as well when a Kraken correlation has been established with the whipsaw candle high. So Kraken correlation has been established with the whipsaw candle high. One of the correlated assets did not take it, while one of the correlated assets did take it. It's followed with a change in staying delivery, and then you'll also have a nice clean standard deviation that you can utilize to project. The thing is that this may not always be the case. This needs to be aligned with narrative. When we're engaging with price action, everything needs to be aligned with narrative in terms of why should this happen? Why should this unravel out? If the higher time frame narrative is bullish and we begin trading towards that high, I'm not going to instantaneously look to engage with price action to then look for that sell side delivery. I'd want that idea to align with our higher time frame narrative. And if the higher time frame narrative is bullish, then the more preferred version would be price action delivering down towards sell side, engaging with that whipsaw candle low first, establishing a point of inception, and then continuing its way up towards buy side to engage with the whipsaw candle high, and then potentially continuing that price action to engage with external objectives as well in relation to the higher time frame. So aligning a setup model with the higher time frame narrative in terms of what you'd want to see play out. But away from that tangent, back looking at the whipsaw candle again, I actually forgot where I left off. I just know it's the whipsaw candle. But in relation to this whipsaw candle itself, it delivers down towards sell side, correcting that devil's mark, as well as presenting a Kraken correlation at sell side. So with this engagement, you'd now look to deem this low protected, as a point of inception would have been established here to invite that buy side delivery motion. And we end up seeing price action opening here at 1800 for the next day, and then continuing that buy side delivery motion, and then another devil's mark ends up presenting itself. And these are just signatures of bullish order flow in terms of price action is very eager to deliver to a certain direction, being all-time highs. It's very eager to create new all-time highs and engage with these round figure institutional levels, because there's nothing at all-time highs that we can utilize on the left side of the chart to refer to. In this case, we're simply referring to price levels as drawn liquidities. And with the observing of this price action, we have this devil's mark that resides here, devil's mark that resides here. I'm simply just looking at this like the engineering of buy side, because as a market maker buy model is unraveling out, we are also engineering sell side for market maker sell models at a later point in time. And as price action stands right now, it's due for a retracement, but yeah, that is relatively it for the hour 4. To be quite honest, I wasn't even going to do a weekly review for this week because we didn't really do much of anything other than breach all-time highs, but the week was rather lethargic. I only engaged with this week twice, and the price action was rather poor altogether. But taking a look at the hour 1, it's a lot more descriptive of what we actually have going on. We have that Monday's trading, and it doesn't really do anything. We're stuck inside of the new week opening gap. We have that 9:30 deliverance down towards sell side, and then we end up forming a point of inception under that weekly opening, and then we grind our way up back towards the buy side. Very high resistance price action, because this move down towards sell side was very low resistance price action, and the grinding back up towards buy side is located inside of that new week opening gap that resides right here. We have the 1800 opening for Tuesday's price action, end up seeing very lethargic price action before we end up engaging with the previous week high, and we see the engineering of sell side before we end up engaging with that previous week high, and then we have the invitation of that sell side delivery motion engaging with all of this sell side here, as well as the fact that on lower fractals this would all be high resistance, so sell side is being stacked up on top of each other during this move up towards buy side, in which we end up correcting during this move down towards sell side. Standard deviations anchored from this leg, a body standard deviation and a wick standard deviation, alignment with that -2, -2.5, and a -4, -4.5. And this is where we end up seeing price action turning around during the Tuesday's trading, keeping the 1800 low from the Sunday opening intact, and we end up turning back around, and still, once again, we are still caught inside of this new week opening gap. Seeing Wednesday's trading being very lethargic, the engineering of sell side would be occurring here, so we have a TLP all right here. Deliverance up towards buy side, and then we breach the Tuesday high of day, and the fashion we end up doing it in is by printing this imbalance right here. So we end up printing this imbalance, we failed to return back down and utilize this imbalance during the Wednesday's trading, and we end up seeing price action returning back down into it during Thursday's trading. So Thursday, Asia session, immediate heavy spike down towards sell side, engaging with this hour one imbalance. Price action gets caught up inside of it. We have that deliverance away from this hour one imbalance towards buy side, engagement with the Wednesday high of day, as well as a smart money reversal occurring here at that -2, -2.5 of this body standard deviation. And this body standard deviation would be your London standard deviation, since the London low ends up coming in around here. And after the engagement with that previous day high, point of inception ends up establishing for that sell side delivery motion. Very heavy deliverance. Reason why being is because a lot of sell side was being engineered during that Thursday's trading. So sell side all here being engineered again outside the range, sell side being engineered all again right here, and then you also have that sell side that was being engineered again right here as well. Now this move down towards sell side, this would be the low of this candle would be the low of the hour 4 whipsaw candle. Now, like I was mentioning previously in relation to the whipsaw candles and aligning it with narrative, what I would have liked to see occur in an ideal world, of course, and I always say this because my will cannot be forced upon the market, even if I have an idea that, if it was to occur and it would play out due to the principles and the rule-based system that the algorithm operates on, I can't force that idea to occur. So with the acknowledgement that this low would be the low of your hour 4 whipsaw candle, what I was looking to see going into Friday's price action, because I didn't trade Friday and I was more than willing to trade Friday, even though my initial idea didn't end up coming into fruition. Before Friday opened, the idea that I was looking to see would potentially be this low being engaged with, crack and correlation serving, and then buy side delivery, as well as the fact that I was aligning it with the idea that this week was going to be a consolidation week. So 1800 delivering us, starting that delivery motion to continue down towards sell side and engaging with this low, and then potential deliverance back up towards buy side, because we had this hour one imbalance right here. But not only this hour one imbalance, it would have been this hour one imbalance that I was paying attention to. With this deliverance down towards sell side, we end up closing below this imbalance, and this imbalance was once utilized as support to then engage with a pool of buy side right here. So we end up closing below it. So I'd be looking for it to be utilized as resistance, in which it was. So we end up seeing this candle trading back up. It's engaging with this imbalance right here. We close back down under the previous week high, and then we end up forming this hour one imbalance with this candle's closure right here. And we end up seeing, just before the market closes, this candle right here engages with this hour one imbalance. So I would have looked to see price action continue that sell side delivery motion like I'd mentioned, and engage with this pool of sell side right here, crack and correlation to present itself. And with the engagement of that sell side, we would have been engaging with the whipsaw candle low, and from the engagement with the whipsaw candle low, if a crack and correlation presented itself, this would have been the idea I would have looked to see unravel out, because it would have been aligning with the higher time frame institutional order flow. So right now, as we know, the daily chart is continuously delivering up towards buy side. We're correcting devil's marks, rejecting them, delivering up towards buy side, maintaining that closure above that previous week high. We have round figure institutional levels that we can look to serve as a drawn liquidity. So I was looking to see if this move would have unraveled out during Friday's trading, and it wouldn't have even had to been during the AM session. It could have unraveled itself during the Asia session or the London session, and then look to have a continuation of New York from that move. But that is not what ends up occurring. So what we end up seeing occur is 1800 opens, we gap up. I'm not sure if we have that closure above this imbalance right here, but we do have it most definitely on this candle here. And once again, devil's marks being printed at the opening and the closing of the candle. I even forgot to mention the devil's mark printing on the closing of a candle is very one-sided deliverance, very, very one-sided deliverance. But we end up having the formation of an order block here. We have a series of down close candles and a series of up close candles, and that would be the formation of an order block. We end up seeing price action return back up, down into this order block, utilizing this imbalance right here from the 1800 opening, and then a cracking correlation was established, and all of this price action is occurring pre-New York AM. So it's occurring pre-New York AM, And with this cracking correlation, we end up having this aggressive candle deliver up towards buy side. And again, this is occurring pre-New York AM when very significant moves and signatures are being presented to us pre-New York AM. And the move that I'm referring to right now would be price action engaging with the previous day high. So engaging with that Thursday high of day pre-New York AM. We end up engaging with that, displacing through it in a fashion of an imbalance right here. You'd look for this imbalance to be utilized as support because it's displaced through a time-based liquidity being our previous day high. And we're aligning ourselves with the underlying narrative that price is bullish. We're aligning ourselves with the underlying institutional order flow that price is showing us on the daily time frame and on the hour 4 time frame and on the weekly time frame as well. I was willing to engage with Friday's price action because with this cracking correlation, standard deviation projected on price, -2, -2.5. Again, this is ahead of our New York AM session. We end up seeing that -2, -2.5 engaged with it. We return back down into this range for reaccumulation of orders. And naked eye, this imbalance would be located in a discount of its respective range. So going into the New York AM session, I was looking for us to return back down into this imbalance, point of inception occur for that buy side delivery motion. And this did end up unraveling. We do come back down, engage with this imbalance, close outside of it, very efficient. But then from this engagement with the imbalance, we then have the formation of an order block. So these series of down close candles, series of up close candles, can look to anchor a standard deviation onto this leg. So you can utilize the wicks or you could look to utilize the bodies. But simply utilizing the bodies here, because utilizing the wicks in this scenario is going to be over exaggerated. It's not to say that the wick standard deviation won't be fulfilled. It simply just won't be fulfilled during that day's trading. So utilizing the body standard deviation, and we end up seeing the high of day coming in at that -2, -2.5 standard deviation. But yeah, that is really kind of it for the week. There's really not much, to be quite honest. Taking a look at this last chart right here, it's basically just the new week opening gap and the way price action was trading around it. We see Monday's trading, we're stuck inside of it, very poor price action, going back up, returning into it. We see Tuesday, we have that deliverance engaging with that previous week high, and we see price actions located outside of that new week opening gap high. Point of inception forms, deliverance down towards sell side. Price action here located outside of the new week opening gap low. Point of inception forms, deliverance back into it. As we're inside of it, very lethargic price action, unwilling price action. And we can see that around the consequent encroachment of our new week opening gap for that Tuesday's price action, we have a consolidation occurring right around it here as well. But simply just come to notice the fact that there are cleaner price runs or a much more clearer price action when we are outside of this new week opening gap. The new week opening gap was inviting for very poor conditions. Once we left this new week opening gap during Wednesday's trading, we end up seeing the first imbalance of true significance being printed here, displacing through that previous day high. Price action being a lot more readable, there's a lot more bodies than wicks, and this is what we look for when we're engaging with price. We don't like to see a lot of wicks. We want to see more bodies than wicks when we're looking to engage with price action. And then we see on Thursday's price action, we deliver down into our new week opening gap, but not just anywhere in our new week opening gap. We ensure that we deliver under the consequent encroachment, deeming everything under it a discount in relation to the new week opening gap's respective range, and then we invite that buy side delivery motion. So honestly, that is about it for the weekly review on NASDAQ for this week. It wasn't really too much of an interesting week, to be quite honest. Could briefly take a look at the 15-minute chart because I haven't yet deleted everything on this. There's also not really much, to be quite honest. Simply just I'm not even going to go down into a lower time frame, but can see with that Friday's trading, we have that deliverance down into what would be an hour 1 BISI that resides right here. But then we end up closing back up into this, back inside of this imbalance right here. And that's good. It's still holding its bullish premise, but it then invites for very poor conditions all the way up until 10:45. And that's when we end up having some deliverance up towards buy side. And after we engage with the intraday high of day, which was the pre-New York AM session high, we slip back into another phase of consolidation. So yeah, but taking a look at the hour 1 briefly, the last thing I'm even going to touch on is the fact that, okay, so we know that this candle's low would be your whipsaw candle's low, and we have the formation of an order block here. you can anchor a standard deviation here. We have a valid swing low and a valid swing high. It's very over exaggerated. It's not to say, like I mentioned earlier, that we're not going to come and exhaust it, but I'm going to first look to get a more precise standard deviation, being anchoring it to the bodies, because I'm ultimately not quite sure if price action has enough juice in it to ultimately continue that deliverance all the way up to the point of terminus. So -2, -2.5 is very achievable. If we continue the current state of order flow, it's very achievable. But from there, would honestly look to see price action roll back over to retrace back into the range it's been delivering. But this would be the wick standard deviation, and the wick standard deviation is simply just anchored to the whipsaw candle itself. And in relation to the institutional round figure level that is around it, it would be the 250 level. So this is what I mean in terms of when price action is at all-time highs, there is quite literally nothing on the left side of the chart for us to refer back to other than our round figure levels. But in order to deem a round figure level a valid drawn liquidity, because I can say, oh yeah, 30,000, even though it can serve as a valid drawn liquidity, for intraday purposes, I'm going to look to align standard deviations with these round figure levels in order to simply have a more accurate drawn liquidity and objective for price action. But when we're taking a look at the daily, very expansive towards the buy side. We're currently approaching that 27,500, and then ultimately going to look at that 27,750, 28,000. And I don't currently have a standard deviation on the daily. The next standard deviation I'd look to utilize would be a body standard deviation. And it simply just anchors for all of this segment of price action right here, and ultimately looking to collapse that at that 30,000, but simply just looking to take it day by day, as I always say. But in relation to price action even coming down to return back into this range, because we still have an unfulfilled TGIF. I'm not going to forget about this, and the algorithm isn't going to forget about this. We're going to fulfill this TGIF at a certain point in time, and it will be apparent as to when we're going to fulfill that TGIF once signatures present themselves on the hour 4. So if I'm not mistaken, this imbalance resides inside of the TGI, and paying attention to this imbalance, it's on the left side of the curve. We closed above it, we never came back down and utilized the imbalance again. We simply just closed above it and displaced away from it instantaneously. So like I was mentioning, in relation to price action returning back down into this range that we're paying attention to on the daily, 100% going to look for the hour 4 to show those signatures. If the hour 4 is still following suit with the daily, then there's nothing. If the hour 4 is still looking to follow suit with what the daily is doing in terms of continuing that buy side delivery motion, showing bullish signatures in its own respective manner, then there'd ultimately be no point in trying to look for that sell side delivery motion. But ultimately, this is just me as an individual trader. I'm a contrarian. I'm always looking to go against the current state of order flow. So with the acknowledgement that as a market maker buy model is printing, it is also setting up for the market maker sell model. But even to further elaborate on that point, for instance, we establish a point of inception for a market maker buy model, and we begin delivering towards buy side. As we're delivering towards buy side, we're having efficient price action, but there are going to be certain occurrences where we fail to fill an imbalance that resides right here. That serves as a drawn liquidity at a later point in time because it's located in a discount of a range that is going to unravel itself out. Or we end up leaving equal lows inside of an imbalance. That's also going to serve as a drawn liquidity. There may be a devil's mark that ends up printing and we don't end up filling it. There may be a new week opening gap that ends up printing and we don't end up filling it. So there may be a new week opening gap, price action just continues that buy side delivery motion altogether. And these are all ultimately just going to serve as draws on liquidity for when that market maker sell model ends up shifting into motion. Because you'd look to say, as we're in our market maker sell model, where is price action looking to draw towards? Oh, we have this unfilled new week opening gap. We can continue down. We have maybe an unfilled imbalance right here. We can come and we're going to see reactions off of these, which are then setting up for the next market maker model. It's just a cycle, to be quite honest. Yeah, you'd end up having like these equal lows, easy drawn liquidity. The reaction from those equal lows, what it's going to end up doing, it may end up leaving an imbalance unfilled here, may end up leaving a TLP, right here, and that's ultimately just setting up for a market maker buy model at a later point in time. And we may end up coming all the way down here, engaging with an unfilled PD array being an unfilled imbalance, and this imbalance holds status or importance. It may have displaced through a time-based liquidity, and from there a point of inception is then occurred for that buy side delivery motion to unravel out again, so on and so forth, to be quite honest. Because when it comes to the market maker models, we don't always have to engage with the original consolidation. We could end up engaging with just the OTE of the respective market maker we could end up just engaging with the respective OTE of the market maker model's range. We don't have to come and engage with the original consolidation, which would be right here, which would be that sell side liquidity that is deemed right here. You can end up engaging with that OTE, or just engaging with the original consolidation and continuing that motion. And this all just boils down to narrative. It all boils down to the underlying objective that price action is looking to unravel out. But yeah, enough of the yap and the tangent. Simply just going to jump into Ethereum lastly. The last overview I did in relation to Ethereum was basically I'm looking for price action to come, deliver into this imbalance right here, as well as the February high of the month. And what we have done right now is we faded that February high of the month, because when the day we ended up coming close to this, posted into my Telegram saying, you know, we're close. And then we end up fading it. We come down, we close below this imbalance. I'm monitoring this imbalance. We end up reclaiming it. We're utilizing it as support. But we still fail to come and deliver above this February high of the month, as well as this monthly SIBI that resides right here. But what has actually occurred is BTC has done the job for us. So BTC has actually come and engaged with this high, as well as engaged with that February high of month. I was looking for Ethereum to engage with this imbalance and that pool of buy side that resides right here, but it's not necessary, because now BTC has just engaged with it, and I'd much rather Ethereum doesn't do it anymore in order for this idea to unravel out. So the next stage in what I'd be looking to see would essentially be a change in stay in delivery. If both assets could present a change in stay in delivery under this candle's opening, that would be rather clean. That would be very clean, in fact. And we'd have a standard deviation on the daily that we could look to project out in price. And we see that -2, -2.5 projecting for all of the price action that resides here, as well as that previous month low. And then that -4, -4.5 projecting for just under I was going to say the low of March, but then I just realized this isn't March. This is supposed to be, yeah. It's just projecting under the low of Feb. Terminus is projecting for 0. In fact, not even 0. No, it's projecting for around $86, but it's also projecting for minus. We're not going to even touch on that. That bridge is to be crossed only if we get there. Like, quite literally, that bridge is only to be crossed if we get there. But for right now, simply be looking to see if we have that change in stay in delivery. Now, in an ideal world, I'd actually much like to rather see price action come, engage with this high right here, and then form its change in stay in delivery, and then have that deliverance down towards sell side. And with the engagement with this high, we end up forming another cracking correlation while leaving the Feb high intact, as well as this monthly SIBI intact. Now, if we do end up coming and engaging with the Feb high and the monthly SIBI, not a big deal. It wouldn't be much of a big deal in terms of ruining the entire trade idea. I'd simply look for BTC to not follow suit and engage with that 22nd of April high. I'd want BTC to move rather lethargic and not engage with that 22nd of April. But that would be that would be in an ideal world. Of course, we may end up just coming down, changing the stay in delivery, having that sell side delivery motion. I'd like to see BTC also offer that change in stay in delivery as well. But with the observing of BTC, we're relatively close to this 22nd of April high. We could end up seeing BTC coming up again, engaging with this high, and then forming that point of inception for sell side delivery. And if that is to occur with BTC, the cracking correlation would look like this on ES, and then we'd end up having something like this end up occurring as well. And if BTC is to come and engage with that 22nd of April high, another standard deviation will present itself after a given change in stay in delivery, and that will also project for these targets that reside right here as well. But In relation to when this could occur, right now it is currently the 25th of April. Perhaps during next week's trading, or at least very start of May, so after the new monthly opening. Because initially, when we were here, I didn't really know as to when this is going to end up unraveling itself out, to when we're going to come here and engage with it. But now, as you know, price action is a bit more developed, I can have in terms a time period in terms of when I can look for stuff. But of course, like I say multiple times, it's so much easier to just take it day by day. Can briefly take a look at the hour 4. Not much has changed. I don't know when or what the hour 4 looked like the last time I touched on Ethereum, but we had this point of inception established right here, -2, -2.5, reaccumulation of orders, -4, -4.5, point of terminus. We see the engagement with the -4, -4.5, well, technically the -4 level only, and very nice engagement right to the tick, inviting for that sell side delivery motion. And what we take a notice to, again, engineering more sell side. This is something that is very important. Smart money like to have their plate full. They like to have their plate full. So like I'd mentioned earlier in relation to a market maker buy model printing, and as we're printing that market maker buy model, we're also setting up for a market maker sell model. This is essentially smart money making sure that their plate is full when the market maker sell model is to occur, because there needs to be voids in price action, being our new week opening gaps, new day opening gaps, and sometimes volume imbalances can be voids, but there need to be voids in price action. There need to be pools of liquidity, relatively equal lows, trendline phantoms. There needs to be all of the sorts for smart money when that market maker sell model is to occur, because they like to have their plate full when the program has shifted from one market maker model to another market maker model. And this is the example right here. Yes, we've taken acknowledgement that since here we're in a market maker buy model and we know we're printing towards market maker buy model, but I can't help but see that as we're doing it, we're simply just setting up for a market maker sell model when it's to occur. And we're still doing it after the Kraken correlation that presented itself with the Feb high. So sell side stacked up on top of each other. To be quite honest, I can't help but see if this move is to well and truly unravel, and I'm not just spewing nonsense, if sell side is to deliver, I can't help but see it be extremely fast. And especially when it comes to crypto, that the essence of this going very fast would be a very strong scare tactic, or a very nice way to induce fear into the general public and shift the sentiment of what the general public think the market is doing, in a sense. But yeah, that is quite literally it for the Ethereum overview, to be quite honest, because there's no point in me dropping down to the hour 1. That's just going to be headache price action. That is quite literally it for the Ethereum overview, as well as the Nasdaq review for the week. So as per usual, would simply just look to engage with these markets day by day.